Hi everyone and welcome back to today's morning report. Charts appraisals on Friday the 3rd of February with me, Rich Perry, market analyst at Handtech Markets. Looking at Eurodollar now, and we've seen this sort of corrective move back towards the uptrend once more, but you've got these two bear candles in a row really. The bulls have sort of lost their way a little bit in this rally. Yesterday's candle, you could argue, is a shooting star where it's made a new high and then closed back towards the low of the day. Very small candle head. That is by all accounts pretty much a shooting star, certainly with the corrective move that's also continuing today. Mild dollar strength is beginning to pull Eurodollar lower. You look at these momentum indicators, nothing too confirming yet, but the MACD lines are beginning to sort of roll over. Stochastics also showing signs of sort of topping out. RSI still holding up relatively well, but certainly this uptrend is now being tested as we speak. We've got this move that on the hourly chart. If I zoom out a little bit, you can get more of a gauge. You've got this support that comes in of this low 107.30. That is your initial support. That arguably completes a little top pattern. If you sort of break that to the downside, you'd then measure the top of the smaller peak, I would say, which would give you 80 ticks of downside, which again, that would sort of put you back into the realms of this old big support, 106.70. So the old sort of breakout level, the old pivot. So you'd be back towards that. The key support is 106.17, which is the lower high. Sorry, the higher low from this corrective move that we saw at the beginning of the week. But for now, the market is looking a little bit corrective. You've got payrolls today, which I would say you're unlikely to get too much direction in front of. So I don't think this 107.30 level will be decisively broken. And if it is, you'll probably get a bit of a pullback anyway. But certainly for now, the market is looking still corrective. And a little bit of dollar strength is pulling the market lower, but again, I don't think you're going to get too much decisive direction in front of payrolls, and then the payrolls report will drive direction after that. But for now, we're looking at a little bit of a test of that support initially at 107.30. Beyond that, you've got 107.10, which is an old break down level from the long-term chart, which again has been a bit of a pivot, nothing too formal, but has been arguably a pivot in the last sort of few couple of weeks. But few levels to see work with there, but certainly I think payrolls will drive. So I wish you good luck in your trading today, and I will speak to you later. Thank you.